Hey everybody, I am back. I know that I have been gone for a couple of weeks, but I did go live from the conference, from the IRS conference. And for those that are tuning in or that have tuned in to me every week, thank you very much for tuning in. The last couple of weeks, I have been in Chicago and Michigan. So I was in Chicago for the IRS tax forum. So today I am going to update you on a lot of information that I received while I was at this conference, so that you guys can kind of get some updates. I did give some updates while I was there when I went live, but I had to come back and give it to you in a very different setting. So today I am flying solo, so I will not have a guest for you guys today. But I will give you the information that you need. And then if anybody has any questions on updates or how it pertains to them in particular, just call me or send me a message and let me know. You can call my office. I will be at the office once I leave, or you can send me a message on Instagram, Facebook. I am here. Okay. So let's get into it. So we know that a lot of the changes that President Trump has put in place will affect your taxes, and it does affect, how some of you will or will not receive, or how much you will receive when it comes to your refund, or if you receive a refund. If you don't, your refund is cut in half, it is not. So I'll just give you a little personal information. So with my tax bill, I owe the IRS obviously every year. It has been like that since I have started doing taxes on my own. I have owed them every year. Every year it has obviously increased, and I am very sad about this. But this year, hopefully, it changes a little bit. But now the one thing for people that are small business owners, self-employed, we do get a 20% reduction. I want to not say reduction. So 20% of our tax bill. Okay. So 20% of our income coming in for self-employed businesses is not taxable this year. So he put in something in place to help small businesses, regardless if you are LLC'd or not. If you're considered a small business, he did put something in place to help us. So we do get 20% off of that income. That definitely helps our tax liability, so you are not paying as much. So for me personally, it cut my tax bill for next year in half. So I've already looked at the projections for how much I'm going to owe for next year. With the reduction and the things that he has put in place, my tax bill was cut in half. So just imagine owing, well, this isn't how much I owe, but let's just say I owe 20 grand in taxes last year. Well, with the new tax laws for small business, I will only owe 10 grand for next year, which it still is a lot, but I would rather pay 10 grand than pay 20 grand. Okay. So that's just kind of how he's helped small businesses. I don't owe 10 grand or 20 grand, but that's just how he has helped, just for those to kind of get some type of understanding of the money that he has, what he has helped us with. But he definitely has chopped my tax bill in half. If everyone else's tax bill will be cut in half, I'm not sure. I don't know what you all have, but mine was. So that was a plus for me. But also a lot of the things that he has put in place are good or in effect until 2025. I know that seems like it's so long away. It's just, it's only 2018, 19 coming up, but 2025 is the only year that is when everything stops, unless we get a new president that comes in that will change that, before then. Hopefully we get that. But as of right now, that's when it is. It's 2025. I know taxes are not sexy. I know we do not like them. Some people are intimidated by them. But listen, we're going to make this tax thing a little sexy today, okay? We're going to make sure that you are getting it. If I wasn't on this detox, I'd have brought you guys a drink with me this morning. A little mimosa to get us going, so we are okay when it comes to talking money and talking taxes. Okay, let's figure this thing out together. Okay, so one of the things that was changed was standard deduction, which means that you get the standard deduction actually increased. So for those, which is not necessarily a good thing for people. I know that different people have said different things, but let me break it down so that we really understand what it means for your standard deduction to increase. Okay. So for those people that itemize, for those people that give contributions, that you write off different things for work, like you write off the mileage, or you write off your dry cleaning bill, or you write off the food that you take to work. These things that you normally would write off are all on the same form. So when they're all on the same form, that then helps you reduce your tax liability, right? So it then lowers let's just say it lowers the amount of money that you're supposed to owe in taxes, but it increases your refund. Okay? These particular things increase your refund and lower your tax liability. Now, normally, as a single person, your would have been $6,000. So between, let's say, property taxes, or let's not even say you have a house. Let's just say between the stuff that you pay for work out of pocket, the contributions you give to church, or to, let's say, you dropping clothes off at Salvation Army, to anything else that you have done with your personal money for work. These things you normally would write off and you normally would get money back. You normally will then see a refund because of the amount. So between one or two different forms, your money had to be over $6,000 that you have given, which or I don't know who your tax person is, but once I get to asking questions, most of the time it's more than these numbers, but now that's doubled. So basically you would have to, let's say you only spend $100 a week for lunch. Okay. Between breakfast, lunch, and dinner at work, you spend $100. With the increase for single people is now $12,000. You basically would have to have doubled everything that you did last year to be able to get the stuff for this year. Does that kind of make sense? Yes, kind of makes sense. Let me know, Facebook, if that makes sense. So you would have to have doubled everything. And most people didn't do that. You didn't now spend more money on food or on work or clothes or whatever you spend money on for work. You didn't double it just to be able to get this deduction. So now, since that has happened, we have to figure out where or how, legally, that you'll still be able to get the refunds you have been getting without doing anything illegal. I'll say that. Okay. So that does mean that fewer people will be able to itemize. That does mean that some of your refunds will not be as much as it has been in the past. For those people that itemize, one thing that might help for some of those is for the child tax credit. Now, the child tax credit, I know a lot of you guys have kids that are watching, or a lot of you all carry a niece or nephew that you take care of, or a qualifying dependent that is under the age of 17. Okay. You get $2,000. Let's put some numbers to it. You get $2,000 per child. Okay. Make sure we understand this. You get $2,000 per child. Hold on one second, guys. Okay. So you get $2,000 per child for the children that are under 17 or under, or that are under 17. You get $500 for credit available for dependents who did not qualify for the $2,000 credit. So they didn't just take away the entire credit, so for those that don't have children, our kids are over a certain age, you still get something for them. You just don't get as much as you normally would have received for the kids that are under 17. But just know that you get $2,000 per child. Okay. But that phases out at a certain number. So if you have 3 kids, you do not get $6,000. I just want you guys to understand that it caps. So either you get $2,000 per child, or you get I think it's 17, maybe 15. I'm going to go back and check the percentage, or you get a percentage of your income, whichever one I think I want to say works in your favor. But if you have 3 kids, you do not get $6,000. I just want to make sure that everybody understands that you do get $2,000 per child, but it caps out once you hit the 3rd kid. You don't get $2,000 for the 3rd kid. Okay. Make sure we understand that. So one of the other things that we also talked about at this conference is the property taxes. So we get property taxes, state and local taxes, we know are limited to $10,000 for the year. We know that there's a limit. We know there's been this big problem with people that have property taxes. You have all these other things and you spend more than 10 grand. So I have a lot of clients in Texas that spend more than $10,000 when it comes to property. So right now we have not, and we still have not. I have one other person to talk to that is a tax attorney to figure out what we can do and how we can help you with this money that you basically will just be losing out on. So for those that if you don't understand, so example, I have a client that they spend at least $25,000 worth of property taxes, local taxes. They spend 25 at their home. That normally you would have gotten this write off and you would have been okay, but now you only get 10, which means 15 grand for them is just kind of floating around because it doesn't do anything now, which normally you would have taken that entire amount and it would have helped you. So now we have to figure out this extra 10,000. What can we do with, 15, this extra 15, what can you do with it versus it just floating away and not being able to use it? So that is one thing we are trying to figure out with the state. If the state has put something in place that they are going to help us out, and hopefully that is done, or something changes, or I just haven't read something or asked some more questions with some other people to figure out what it is that has to be changed or what we can do to help you guys out. So that we are still working on. For those people that have these homes and that you pay a lot of property taxes, don't get discouraged yet. We are trying to figure it out. I am working digitally. I am working very hard to try to figure this out. Okay. All right. Now, we no longer have a personal exemption. So for those that you would have gotten $4,050 for yourself, just as a something that you claim for yourself when you file your taxes, which that would still help out your tax liability, but you no longer get that. So that is gone completely. Okay. The Form 2106 is also gone completely, which means that I know I'm saying them, maybe not. Let me go back. So the 2106 is normally where you could write off the food that you have for work. When you drive and you go to, let's say you go to work and you leave work to go to another facility and you do some work over there and then you have to drive back. Well, you normally could write off that mileage that you go back and forth. You normally could write off the food that you had to buy on your way to that other place. If you work from plant to plant, let's say you work for T-Mobile and you go from one T-Mobile to another store to drop off something or pick something up, you normally could take those deductions. Or you have to go into work for a meeting that you normally don't have to go to. Or you coach. Let's say you're a coach, you teach and you coach, and you go from your job. Let's say you go on the weekends, you guys have to go to Austin, or you're in Michigan, you guys have to go to Battle Creek, or you have to go to Chicago, you got to go to Grand Rapids, you have to go to Wisconsin, you got to go to San Antonio. Wherever you have to go, you normally can write that off because it's work and you're paying for that. But now you no longer can write that off. That is now gone. You no longer have that. So now we have to figure out what you can do. If you didn't know that you could write those things off, I'm sorry. You guys should have been coming to me all this time, okay, at Calvary's Tax Service, but you weren't. So it's okay. You guys will come in now because I can, help you get this money back that you just have not, that you just lost all these years. You just didn't know that you could write all this stuff off. I'm sorry. Your tax person is not as good as me. I'm sorry. Anyway. Okay, so for those, we also have estate planning. So estate tax exemption doubled to $11.2 million for individuals and $22.4 million per couple. So for those that are in this particular tax bracket, or you have $11.2 million that you want to put off for your estate tax. So what this means is you have some estate. Your estate is worth let's say your estate is worth $20 million. Okay. You have put so much for this estate tax, which means that the amount is excluded or subtracted from the estate gross. Okay, is what that means. So now, instead of me getting taxed on this 20 million, I'm taking 11 from that 20, and that's what I'm getting taxed on. Does that make sense? You got to be able to have the money to be able to get taxed on this money. But just know, if you get there, when you get there, that's what it is. Yeah. Okay. We also talked about the mortgage interest. So we know that if you are buying a new home, so this is new. So if you are buying a new home, your mortgage interest, the deduction is capped at $750,000 for any mortgages loans taken after December 15th. So one thing that I do want to mention for you guys. So for those that this is new, this was new. What I learned. If it's new, I'm not sure. But if you have a house and you already have a mortgage interest, and then let's say you take a second mortgage on your home, right? But let's say this second mortgage, and they gave you the money, but this second mortgage that you have is not for repairs. It's not for the maintenance of your home. It's not for construction of a home. It's not for any of those things. You cannot write off that interest and taxes that are on that new 1098 form. Okay. Let's try this again. Okay. If you have a home and you have a mortgage and you take a second mortgage, and then you use the money for the second mortgage to buy a car, to go on vacation, to pay off debt. You then have two 1098 forms. If you have a home, then you know what I'm talking about. If you don't have a home, then you'll know once you buy one. You now have two 1098 forms. You cannot write off the second mortgage paper that you get. You cannot write that off because it's not for anything dealing with the home. If you take this out and you get the roof repaired, or you buy new appliances, or you get some walls redone, or it's construction rebuild of some sort of something in your home, then you can write that off. If that's not what it's for, you cannot write it off. Okay. I just want to make sure everyone understands that. If you are grandfathered with your loan and that it's over $750,000, you're grandfathered in, and you take a new loan, and now this new loan is going to be more than $1 million. You need to bring your checkbook to the closing and pay the difference out of pocket so that you are not, so that you stay grandfathered in. If you do not do that, then you will not be grandfathered in to the previous years like you have been, and you will now be at a new $750,000 that's capped like everybody else. Okay, so let's kind of make a note of that. Okay, Bitcoin. Okay, so we have Bitcoin, we have cryptocurrency, you have Bitcoin. So a lot of people, and I know a lot of people personally, that have invested in Bitcoin, that have some type of cryptocurrency somewhere that has not been taxed. We have not had to worry about it. The IRS didn't know what to do with it because it was so new. But guess what? It is now taxed as a capital asset on your personal taxes. It is now counted as income. Okay. So if you have cryptocurrency, if you have any type of Bitcoin that you have buying, selling, or holding, is now taxed. Okay. So when you come to file your tax, you need to make sure you have this paperwork that you have pulled from when you bought it, how much it cost, when you sold it, how much you got. All of that now has to be filed with your taxes. I know that sucks, and I'm sorry. There's nothing I can do about it. I'm just the messenger today. All I'm doing is giving you this so you guys know that that is something that you guys would like to know for a lot of you all that have Bitcoin and what you can do with it. And then when it comes to Google, okay, a lot of you all have Gmail accounts. and Yahoo accounts, but a lot of you have Gmail accounts. One thing that the cybersecurity people told us is do not, okay, share personal information through Gmail. Do not social security numbers, bank information, birth certificates, anything personal, do not share through Gmail, because Gmail is a free service. And with them being a free service, anything that you send through them, they store in their database. So if somebody hacks them, like they recently did with Gmail, got hacked. I think it was in the news or something like that a couple days ago. If they get hacked, people then can pull this information because they've stored it. They pull this information that you have sent to someone else, and now they have all of your information. So they have your bank account, they have your socials, they have your birth certificates, they have your government name, they have all these things that you don't want to get out. So hopefully your tax person, whoever you're sending this information to, they have some type of secured folder that they can upload your information to, that you can upload your information to, that you can give to them. So for me, all of my clients this year, whenever you send me documents through email, all of it will be uploaded to a secured folder that is encrypted so that it then cannot be hacked. If you do not have that right now and you are sending stuff through Google or you're sending stuff through Gmail, please stop, because you do not want any of your information to get out. You do not want these things to be out there. But they did stress this about Gmail. I guess maybe Google has been hacked a couple different times. I'm not sure how many times it has happened, but they did stress that do not send your information through Google. Okay, so that is one of those things. Don't send it through Google. If anybody has any questions, let me know. But right now, hopefully you can call your tax person. If you don't have one, you can always call me. I am always willing to help you out. But please do not send it through Google or Yahoo. Do not send personal information. Please make sure that your tax person has an encrypted folder of some sort that all documents go in there, so then you do not have this problem. Okay. So that was one of them. We also, okay. So let's talk about this. So we have repayments of loans. So, a lot of companies, if you guys have 401ks, 403bs, 457s, thrift saving plan, whatever you have at your job, you are able to, if you take a loan from your job while you still work there, and you are paying them back through your paycheck. So let's say I work for Exxon and I took a loan from my 401, but I'm paying them back every 2 weeks. But then, which means I don't get any 1099s. It's not going to be on my taxes at the end of the year. I'm not getting penalized because, you get a penalty when you are under a certain age and you take this money early. So let's say that I'm paying them back through my paycheck, so that doesn't happen. Well, let's say that now I go from Exxon to Shell because Shell now offers me more money. So I'm leaving the company. So normally what you could do is normally they would take the money that whatever you owe them, they would take that out of whatever you have left that you have to pay back. They would take it from a paycheck or they would take it somehow. But you would have to pay it back before you could leave. Well, now you don't have to pay that back before you leave. You can leave, and let's say you still owe them $2 or $3 grand. They will then just send you a 1099, and with that 1099, you then will have to file that with their taxes. The only thing about 1099s is that it's going to cost you so much money when you go to file your taxes. I just want you guys to understand this. You get taxed because you're under the age of 59 and a half. You're not supposed to touch this money early, so you're going to get taxed twice. Please understand. You get taxed twice when you take the money, and then when you come file your taxes, you get hit again. And if you didn't take any taxes out in the beginning, you still get hit. You're going to get hit pretty hard when you come sit in front of me or in front of anybody else to do your taxes. So what I would recommend is, if you're going to leave a job, let them take the money out of whatever your service package or whatever you have left. Pay them the money if you can pay them, or don't take the loan out. Okay? Or don't leave the job until the loan is paid back, is what I would tell you. I know I'm getting close to end, so let me go through one more, maybe two. So one of them is they also talked about the innocent spouse rule and relief. So for those of you that are married and that are not filing together, it is illegal. I just want you guys to know that. But if you for some reason, like, your money keeps being taken, like, let's say you and your spouse have filed together, but your money was taken due to his back child support, her back child support, student loans, some reason you are the IRS, some reason somehow your money was taken and you're part of this because you are not filed together. There is a innocent spouse. I know I've had clients ask me about it and I know about it. I'm not sure if other tax people actually know about it or they just don't mention it. But there is an innocent spouse form that can be filled out so that you and your spouse can file together. And whatever portion that he was supposed to get, they will take. And then the portion that you are supposed to get, you get all of your money back. Okay? So you get majority of your money. It kind of determines what they feel like you should get, but you get your money. Versus them taking all of your taxes. Okay. You get your money. For those that don't know about the innocent spouse, I know some people have filed together within the past couple of years and your money has gotten taken. You can come back and amend your taxes and add this form on there and then send it off. And then the IRS may or may not ask you for some more documentation, but you may get part or most of your money back. So that is one of those things as well that you kind of need to be aware of that. For those that don't know about that. And then with, for my small business. Okay. So let's go back to small businesses. I forgot. For my small businesses that want to have employees and you want to start giving them like retirement, or you want to set them up for some type of retirement, or you think you're too small to be able to do that, you are never too small to set your employees up with retirement or with some type of plan. So it just depends on how you want the plan structured. You can do an IRA salary based plan, which means that you, the money for it, basically kind of like it is now, the money just comes out of their salary and goes straight into another account, which then there's not a lot of administrative work that you as the boss have to do, but they still can only put up to $5,000 or $5,500 in that account. There is a SEP plan. We know that IRA SEP, you can put up to $55,000 in there. But the only difference is if you then have employees and you set this up for the employees, whatever percentage you put in there for yourself, you have to then put that in for your employees. So if you're an employee, you don't, basically kind of comes out to 25%. You don't want to put 25% of your person that works for you, your employee. You don't want to put 25% of their money in the account, because you have to do that out of yours. It kind of gets pretty expensive. So it kind of depends on what works for you. You can do a simple IRA, but you must make at least $5,000 for the year. You can do deferrals from your pay. You can choose the 2% for employment or 3% for anybody, whoever chooses to do it. So I know that taxes are not exciting. I know they're not sexy, guys. I understand that. I try today. I don't think I was that successful about trying to make sure that it's sexy for you, but don't worry. It's coming. I'm trying to figure it out as we go. It's coming. But, today, so that's work. I'm not going to give you some type of financial, I normally give some type of financial tip for the day. I don't have that to give you today. I can tell you that one thing that I am doing in my particular household, we have now gone down to, or we are going to one income. Well, I guess I'll give you a financial tip. So we are going down to living off of one income and then paying debt or anything else, any debt or whatever you have off the other's income. So what you do is we live off one, which means then a lot of the things that you've been doing and stuff, you scale it back. You live off one, you pay all your debts, and all these other things off of the other. So then once all of your debt is paid off, you then can go to an income and a half. So half of the other income that you guys were not using can go into a savings account or investments. And then you go to living off an income and a half. So once you get used to living off of one income, you then do these other things, which maybe, you know, cuts back on you going out, you having drinks, this, and that, maybe. Depends on how you guys are living. But it then gets these other things taken care of, so then you are financially free and you don't owe anybody anything. So then if you want to be able to retire by the time you're 45, or do you want to be able to live and travel like you want to live, and you go to work because you want to and not because you have to. So if you start putting different things in place now, that you'll be able to do that, is you would then definitely be financially free. So that is all the time I have for you today. I'll kind of let you guys know how that works out for us in our household, but that is where we are. So thank you for tuning in. Please go to my YouTube page and subscribe to Making Money Moves podcast. Please look through my tax website. Different things are being added on there every day. There are, or at least once a week or so. We have different things coming up for trainings that are coming out, that doesn't have to do with tax. It has to do with budgeting, a different type of platform, but I'll let you know about all of that. So it's a lot of different things coming up, a lot of movements around. So Making Money Moves podcast on YouTube. You can go to Making Money Moves on iTunes. Making Money Moves is now on iHeart and SoundCloud. And then you can check out Calbert's Tax Service on the website. We have information to give you. If you need some information, if you need to know some different things, let us know. I will see you guys next week. I think next week I'll have a guest on here. We'll see what happens, who comes and who doesn't. Shout out to my business coach who got me together this morning. I am trusting this process as well, guys. So we will kind of see what works. And we are out.